So welcome to today's webcast, the Productivity Challenge, finding the balance between risk, growth and innovation. I'm Sarah Butler, Consulting Markets Leader at PwC. Today, we're here to talk with the Grattan Institute's Dr. Jim Minifie and PwC Consulting's Managing Director, Neil Plumridge, on the impact of slowing growth and the resulting challenges for both our economy and for business more broadly. Before we start today's discussion, I'd like to invite you to submit questions to our speakers, which we'll respond to after today's webinar. To ask a question, you can use the form on your screen or tweet your question using the hashtag #AUInTransition. So let's get right into it. Jim and Neil, as you know, Australia's had more than 25 years of continuous economic growth. But as we also know, times are changing. And there's a global anxiety that we're seeing as well about productivity growth slowing and stopping. This is not just impacting the economy, it's also impacting voter sentiment, consumer sentiment, a lot of worries about slowing growth around inequality. And we've seen this in the UK's Brexit result, and we've also seen it in the recent election results in the US. So let's talk a bit about the impact of slowing economic growth. We saw here in Australia from the ABS reports that Q3 we had a contraction, first time in many, many years since the financial crisis. Growth has slowed to about 2%. So my first question is for you, Jim. From your perspective as an economist, how much do you see this as an issue? Is this the new norm going forward? Should we be worried about this, and how should we be thinking about this?
So keeping growth positive is just so important for many things that the community values, right across from healthcare spending to jobs and being able to fund education and so forth. There's no question that economic growth can be a significant plus for the community, and the community is quite right to be concerned about what the next phase of growth might look for. When you look around our rich world peers, what you see is a huge slowdown associated with the financial crisis. Some economies have got out of that, so now the US has had relatively strong growth, much stronger than much of Europe, for example. Japan had a similar episode in the early 1990s and took really, until today, hasn't fully recovered. And so I think there's a general sense that we had a support through the mining boom in a way that many of our peer economies didn't. And so there's an open question about where we go from there. Now, a lot of what I've said is really cyclical. It's about the financial crisis and the follow-on from that. There's a deeper question about whether productivity growth may have slowed down as well. When you, again, look around the rich world, there's a lot of synchronisation between the pace of productivity growth in different economies. And in many rich world economies, after a period associated with the internet boom when it was relatively strong, productivity growth slowed down in the early 2000s, and it's been patchy ever since. Now, for Australia, ours has picked up a touch in the last few years, but the combination of still somewhat patchy productivity growth, a loss in national income associated with declining resources prices, which again has reversed a bit in recent months, but nevertheless it was a big fall from the peak, and then a bit of generalised slowness with some increase in underemployment across the economy, does raise, I think, concerns both in the community and at the policymaker level about where do we go from here.
Yeah. And do you see this continuing? Is this the new normal, or are we going to see a change back to the days of growth that we've seen in the past couple of decades?
Yeah, so demographics are somewhat against us. We're losing, let's say, 1/4 of a percentage point of growth a year just due to the ageing of the population. Long-term productivity growth rates are very difficult to forecast. There have been long periods in the past when growth was slow, and it's possible that we're in one of those again. I suspect, though, that there's a significant component which is still cyclical, and as the rich world begins to resolve some of the bad debt issues and the rest of the hangover from the financial crisis, you are beginning to see some upturns in Europe, Japan, and as I said, the US is not doing too badly. And then our trade partner growth has not been too weak. So ultimately, I'm not too concerned about the growth pace, but I think it would not be prudent to, certainly for policymakers, to count chickens before they've hatched when it comes to being able to pay for social services.
Understood. And Neil, what are you seeing from the business community? Yeah. How are they reacting? Are you seeing impacts on investment? What are the changes that you see happening?
Look, similar to what Jim has said, I mean, growth is really important for businesses as well. I mean, costs every year rise, shareholder expectations on returns continue to rise, and so no business out there can afford to grow their organisation at below GDP levels for a start. What we're seeing now, though, is risk appetite, particularly coming off the third quarter results last year for the economy. Risk appetite is lowered, and the level of confidence around growth and investment to get the growth it really come under question. And so if you're a board or an executive there, you've got many choices. You're flush with a lot of capital. The capital is relatively cheap, compared to the past few decades. So that the choices are there. It's risk appetite to actually go after that growth, and it gets harder and harder every year, particularly in a global context where the uncertainty, whether it's political or whether it's geopolitical, there's all this plays into one of confidence. And what we perhaps saw at the end of 2016 was boards and executives just hit the pause button until we could see another quarter or another quarter's results come out, and then we can understand whether it's a short-term issue or it is the new net norm, as you said, Sarah.
Right. And I guess at the same time as all of this, we're also seeing the start of the fourth industrial revolution, lots of opportunities around digital and technology. We're seeing robotics being able to be maybe one of the answers around improving productivity. So Neil, are you seeing companies react on this? Are you seeing them start to take up on some of the opportunities that digital brings?
Look, we are. On the robotics, we're right at the starting point. I think there's enough evidence and reports and some good case studies to show that that's going to play a major role in corporations over the next decade or so. But we really are at the start. In terms of the digital space, what we've seen the last 10 years is digital technologies used to disrupt incumbents. We've seen some of the well-known brands, whether it's Apple disrupting Nokia, or whether it's Uber disrupting the taxi industry around the world. But a lot of that has occurred around the front end of an organisation, the customer experience. We haven't seen that translate to productivity gains yet. And so I think the jury's out on whether digital and digital technologies are going to drive the wave of productivity through organisations that we saw perhaps in the 90s in organisations. So for me, I'm optimistic. I think it will, but we are at the starting point, and we need to see some evidence of digital technologies driving major productivity through organisations.
Right, and I'm sure, Jim, this opens up lots of questions for policymakers on how to think about that new environment and appropriately stepping in around regulations. Any perspectives on that?
Well, there are multiple levels. So first, policymakers need to think about how they grow the pie, and they're thinking really hard about what they need to do at the different levers that they control to help accelerate the adoption and the diffusion of those technologies that are driving productivity. So there's an agenda inside, if you like, the growth enhancing part of what governments are attempting to do. And I'll go into that in more detail if you've got interest. But the second part that communities are looking to governments to manage is around the impacts on the community. So if you have very rapid technological disruption, then even if the average goes up, you could find that communities, whether it's geographical or skill-based or what have you, can be left behind and can even be made worse off by rapid technological change.
Yes, and I'm sure that can compound some of the issues that we've already seen around rising inequality. Will the jobs come back again? We may say we want more manufacturing jobs, but will those jobs exist in the future?
That's right, and Australia has been on a somewhat different and better path than much of the rich world in recent decades, but it doesn't mean that all of our economic transformations have been good for everybody, and in particular the mining boom has protected the more blue-collar part of the workforce to a degree. So we have seen an increase in wages inequality. That's been offset at least until 3 or 4 years ago with an increase in hours. But as you come to the end of that mining boom, there's a question about whether some of the opening up of inequality that you've seen in the US context, for example, might accelerate here.
Yeah, and do you think we're being productive enough in Australia, whether it's as business leaders, whether it's as policymakers? Is there more we should be doing?
There's no room for complacency, and I say that because we're an open economy, we're highly trade exposed. We've been very lucky in having very strong resources demand and to some extent demand for other agricultural products and so forth over the last decade or so. But looking ahead, there are other parts of what we sell and what we produce locally that are going to be coming under intense trade pressure. And so there's no question that if we just stand still and rely on technology making it easier for us, we'll actually fall behind in real terms because others are doing more.
Right.
Yeah, look, and I would add to that, I think from the human capital point of view, the millions of people that we employ in our industries today, and 70 or 80% are in the services-based industries, which is heavily labour-based. There's massive scope for further productivity just by getting that workforce more engaged, either in the purpose of the organisation, developing their own skills, calling out activity that is wasteful and non-productive. I don't think yet Australia could claim itself as the most productive group of organisations in the world. So we know the clients I talk to on a day-to-day basis, that's one of the things they're struggling with, is how do they align their workforce to the purpose of the organisation, and then for the individuals within the workforce to fulfil their potential. And so, I think there's a I don't know what the percentage is, but there's a several point percentage gain if we can just align the workforce into a much more purposeful world.
Right. And I'm sure there's some broader implications of that shift we're seeing in the economy from more sort of products and manufacturing and primary sectors towards more of the services sectors. So Jim, from your research, any insights that you could share with us on that?
So as Neil said, there's been a long-running shift towards services in the economy, and that's been something that you see across the Western world, and it's essentially because as incomes rise, people don't want to buy just more stuff. And then overlaid, there's a trade angle. So a lot of the hardware, if you like, is being produced elsewhere now. And so those trends haven't finished, but actually they've played out in a fairly comprehensive fashion. So now, you've got manufacturing employment that's below 8% of the workforce, and manufacturing's well below 10% of GDP and so forth. There's only so much further it can fall, and it won't fall all the way to zero, if for no other reason. And then there's a lot of non-traded manufacturers essentially associated with the building sector. So to me, the much more exciting agenda is how you transform services rather than whether services are going to grow per se. And there's a huge amount that can be done to improve how we do health, how we deliver education, and then all of the market-based services that, from financial services and others, there's a huge opportunity to use technology to improve productivity.
Yeah, understood. And Neil, you've presumably seen this with many business leaders across the country. Any examples of how organisations should be thinking about this and really taking up on the opportunity that Jim talked about?
Look, I think there are a number of examples. The one that I think that has really done a fantastic job of transforming the customer experience, and then also the productivity gains that can be done there, and it's actually driven, I think, growth in their sector. It's the travel and tourism sector. So there are great organisations in that sector that, with a click of one or two clicks within their website or on their mobile phone, within 30 seconds, within a minute or two, you have a choice to make around a purchase, and compare that to a decade ago. The level of benefit and productivity in the economy, I think it's actually grown that sector, and so I think there's other sectors that are going to look for best examples, not necessarily here in Australia. I think there's some of the best examples can be found anywhere, whether in Europe or the US. So it's a quite exciting time to be advising clients and to be looking at this topic. The real question for those that are in the digital space, though, is how do you drive productivity, not just a better user experience?
Okay. And from a broader economic perspective, I imagine, Jim, this opens up, as well as the domestic opportunities, what could be done around making services a larger export sector and a source of growth for Australia overall.
Yeah, that's right. And if you think about, in a sense, the first wave of China's joining the world trading system, that's predominantly been about goods, and certainly for Australia it's been predominantly about goods. We do have significant service exports, and if you think about whether it's professional services and engineering, design and so forth, these services are increasingly tradable, so you can build a global business from Australia, and some firms are capturing that opportunity, and that's going to expand, no doubt. And there are real questions about the international trading framework for that, because a lot of the ways we think about trade have been set up for goods. And so now, with what looks like the failure of the TPP, let's see, there's going to be an agenda about how to ensure that we can integrate effectively, particularly into the rapidly growing Asian market.
Okay. So if you were maybe Neil sitting in the shoes of a business leader, or Jim sitting in the shoes of a policymaker, what would you be thinking about right now?
Look, I think the first thing is try to get alignment among your board and executive about the marketplace, and is this a marketplace that they see fantastic opportunities in, or not? So I think alignment from the board who represent the shareholders down through the executive team, I think that's the first thing. And I see wonderful opportunities, and I hope most in corporate Australia do as well. So once you've recognised there's a fantastic opportunity there, it's then picking those spots in the marketplace and going after them. And we would suggest you go after them in a manner that is outside the core of your business. Try to transform the large organisations from within is really difficult, and in this environment takes too long. And so the better examples we've seen of organisations transforming and capturing opportunities is they actually set up groups or cells or divisions outside their core, and double down on those bets. Doesn't work, okay, put it in the cupboard. What's the next one? So transformation programs and large pursuits of opportunities, the timeframes collapse from 5 years to now it's 9 months, 12 months, and then you move on to the next thing. So the first thing is get everybody aligned that there's an opportunity out there, but if not, that sets you up for a whole bunch of different challenges. And so if you don't have the growth out there, then you've got to try to get the capital that you've got to try to reduce that capital, because you're not going to be able to grow the business. And that gets into another spiral, and there's another conversation around what do you do in a business that's not growing.
So from policymakers' standpoint, there's a near-term agenda about managing the budget whilst not providing a big break on growth, and there's a whole set of sub-agendas that need to be run there. It's a very, very delicate balance. Monetary policy is about as stimulative as you could expect, and you've got to do that in a way that brings the community along. So that's sort of number one. Second, there's a medium-term agenda about driving economic growth, and that really, to my mind, means opening up even further to the world economy, making sure that we've got strong foreign direct investment in these rapidly growing technology-based sectors in particular. And what that will do is help flow ideas and human capital from the rest of the world, and to put competitive pressure on Australian non-traded sectors as well. And that really gives a competitive incentive for Australian firms to deliver more for their customers. And then I think the third part of the agenda is about that community cohesion, making sure that we can deliver services in an efficient way and in a low-cost fashion to the people who need them the most. And there's a whole set of opportunities around refined use of market-based mechanisms and giving people more autonomy, but still government needing to be involved to manage the quality agenda.
Understood. And with that as well, on the community agenda, coming back to this challenge of inequality, so actual inequality, perceived inequality. What role can leaders play in addressing that? Is that a responsibility of business leaders of the future? Is that a broader responsibility? And how do we think about that issue?
Yeah, so the core of that agenda has to be around skills and education. And the wonderful thing about skilling up part of the population is that group benefits because they're able to capture the opportunities directly. But there's a flow-on effect to the people who perhaps don't have that high level of formal education, because they become relatively scarce, and so that supports a good market outcome for their incomes and their work opportunities. And there's a huge amount that public sector decision makers need to do to get that right. But there's also a private sector agenda as well, right? You think about the amount of human capital accumulation that occurs on the job and on the workplace. To my mind, there's a big opportunity there too.
Yeah, and Look, I think it's a hard one, because if you're in the for-profit sector, there's a lot of labour is seen as commodity, and I think there's a licence to operate, particularly for larger organisations, where they do have to have a voice and they do have to have a care factor around issues that are wider than just their own organisation. But if you're a CEO, there's sort of three labour issues or three people-related issues they're dealing with. One is, how do I get access to the really hot skills, the skills that are going to are critical to my business over the next 5 to 10 years, and they are in really short supply, and everyone wants those. The second is, you have a core group in your organisation that are your high-performing team, and so how do you keep them motivated, engaged, and incented to do even more? And then the third challenge is where we sort of started here around robotics and automation, is actually a large chunk of your activities and work, and some of the studies we've done at PwC show that over the next decade or so, it could be up to half of jobs will either be eliminated or will be severely disrupted through automation and robotics. So as a CEO, you've got this balance of social on one hand, and then also actually you've got these really three big issues around your labour force that you've got to deal with. So it's not an easy one.
Yes, probably to quote the Chinese, may you live in interesting times. It sounds like we've got lots of challenges facing us. So any final thoughts from either of you on kind of the outlook and things that leaders should be thinking about?
From my point of view, I think the key thing is to recognise that we've got a lot of discretion about how we handle this next wave of technology. It would be one thing just to set back and say, well, look, we're going to, fundamentally, we're competing against the machines are going to win in some areas, and we'll let people deal with that. But I think the much higher functioning way for us as a community to deal with this is to recognise that we can compete using the machines, and that makes us more productive as individuals, it's more empowering, and will deliver better outcomes across the community. So to my mind, it's about stimulating a discussion and recognising just the potential scale of the disruption. Neil, as you said, you can look at individual sectors where they're already very, very significant robotisation of major workforces in different parts of the world. Now, if we sit back and let that happen, well, we'll end up with a workforce that, if you're 45 or 50 and it's getting pretty late to retrain, the end of your career is not going to work out in the way that it could have if we're much more proactive about it.
Yeah, look, I share Jim's comments. This is a really interesting point. We're at an inflection point. Everyone who has a mobile phone is a disruptor now, and you can be located anywhere in the world, and competition can come from anywhere in the world. Even if the TPP falls apart, there will still be agreements, from country to country, I'd imagine. So disruption is here. It's going to happen. I think, though, that if you're a worker, a lot of the change up the last 10 years has been from the customer back into an organisation. I see the next wave actually from being within an organisation, and I would say the 6 or 7 million people that work in Australia, the next 10 years there's going to be a lot of disruption within organisations that perhaps we haven't yet seen.
Yes. But it sounds like the message from both of you is we should be proactive around that and embrace the potential, and look at where we have opportunities and how we can manage through that, and in particular around the workforce and people aspects of that.
Yes, that's right.
Yeah, absolutely.
Okay, well, thank you both for sharing your perspectives. Fascinating discussion. I know we'll have very interesting times to come over the coming years, and really appreciate you both contributing your perspectives.
Thank you. Thanks.
Okay, and for anyone who's listening in the audience, we will be very interested in hearing your questions. Both Jim and Neil have said they'll be able to provide answers to that after this webcast, so please send those in. And you can also sort of follow each of them on various forms of social media, including LinkedIn, if you want to stay in the flow around the dialogue. Thank you very much.